Stop looking at it from a surface level standpoint of saying, hey, the interest is 7%. I can't buy a home. It's like, well, no. Well, what if I can tell you I can get that interest rate down to 4.5%?
There you go.
Are you interested in purchasing a home?
It sounds pretty good to me.
Absolutely. Reach out to us. Let's have that conversation.
All right. So we're back at the Prepare to Compete podcast. Just wanted to kind of transition to different things, right? We talked about, again, how veterans, the PACT Act and all that other good stuff. But now we want to kind of transition a bit. We want to talk about real estate, right? Because there's so many different, I would say, things going on with real estate right now. But we want, I think, Mr. Jones here has a lot to discuss in regards to some of the crucial factors and how real estate is going to, one, not only impact everyone and also impact the veteran community, but five factors that you need when purchasing a home, right?
Absolutely. Definitely going to relate it to the veteran community, but also want to speak to the greater community.
Yeah.
As well, because I am so sick and tired of people complaining about the interest rates and putting all those factors out there as far as why they can't do something, right?
Yeah.
I'm going to sit here and show you, well, how can I make this actually happen, right?
Wow.
What can you do to make your real estate goals happen if that is in fact your goal, right?
Yeah.
So we want to talk about different kind of crucial different things to look at if you are actually considering purchasing a home, right? So the first thing is going to be job stability, right? So that is going to be paramount. So and I'll just actually list all of these different factors here, and then we'll go and we'll talk more in depth about each and every one and allow you to kind of chime in there as well. Okay. So the 5 things that you want to consider if you're looking to purchase a home in 2023 is your job stability. You want to look at long-term ownership, right? How long do you plan on actually being in the property? You also want to look at whether you actually have an emergency fund, right?
Wow.
So if you don't have an emergency fund, don't let these slick talking realtors get you into thinking, oh, I can just buy a house, zero down, and we'll just be cool that way. No, absolutely not.
Okay.
Also, something else, we have some business experience here. We got some MBAs in the building here, right? You want to also look at a business term called your opportunity cost of renting versus buying a property, right? And evaluating that, we'll definitely dive into that. And also, last but not least, of course, you want to actually consider the mortgage interest rates, but not just for the reasons that you think. So stay tuned to the Prepare to Compete podcast. On this episode, we're going to totally break all those things down.
Nice. All right, so man, you really touched on a lot of crucial factors there. One thing I would definitely kind of want to ask, right, would be, when transitioning out of the military, how crucial is a job, or how crucial is that for you? I know we're talking to the masses and talking to the general population, but we always want to talk in regards to the full community as well. So
absolutely.
But yeah, how would that be an effect of the community?
No, that's great. Yeah, because we definitely want to relate everything we're talking about back to the veterans. So yeah, if you think about like a veteran transitioning out of service, right? It really just depends on where you at in your life. Because are you transitioning out of service and did you already have a career while you're still in service? Some servicemen actually start working other jobs while they're still in the service. They already start on that second career. So if you've already started on that second career, you have a higher likelihood of being able to purchase a home right out of service. So what you want to really understand is that job stability is going to be very important when you're purchasing a home. Your mortgage lender is going to want to see at least 2 years of job stability, as far as not the same exact job or position, but just within that same industry, right? So if you were thinking about purchasing a home and you're discharging from service within the next year or so, and you don't already have that second career lined up, you may want to try to purchase that home before you get out of service, right? Because if you are not going to have a job once you get out of service, you're not working in that same industry, you're going to have a hard time.
Yeah.
So we think about a veteran like yourself, right? You worked in logistics and service. So let's say you worked in logistics and service, and right outside of service, you get a job working in logistics, right? So then that will kind of transfer over. You're making the same income or more. That would definitely help you to be able to purchase a home right out of service.
Nice. That's crucial information, because I will tell you, understanding that those ins and outs, right? Because if you have 3 months kind of left in service, a lot of lenders aren't going to allow you to purchase that home or get that loan, because you are kind of at risk, right? Because you don't know what's going to happen when you transition out. So when do you actually recommend that they look into purchasing?
Yeah, absolutely. I recommend looking into it and talking to a lender and talking to a real estate professional as soon as possible, right? Even if you don't feel like you're ready at this moment, you don't know everything, right? Put everything on the table, let the professionals give you the information, and then we'll be able to kind of decide what options that you have. So of course, if you're a service member, you have a couple years left, I would recommend trying to purchase a house right away if you are in that financial situation to be able to do so. But if not, we can go ahead and see where you are and then kind of create a plan of action based on that. Because you may be in a situation where you're transitioning jobs, but maybe you have a spouse that, their job history is very steady and different things like that, and you guys may be able to qualify based on that.
Got it. So basically, just speaking with the professionals, right? And again, everyone does not know everything, so please always speak with a professional. Just as he said, if you have a year prior to getting out of service, that's definitely highly recommended. Please go speak with a professional so you can get qualified, okay, and then make a better decision once qualification happens. But great. I mean, that's great. That's great information. So, but I guess kind of next up is where I want to kind of figure out. I guess there's more than one question, right? When we're talking about transitioning, most service members and most people with how the economy is, right? They don't necessarily stay in the same place for many years anymore. When we go back to our parents or grandparents, they may stay in the same home 30, 40 years, right? But that's kind of not what's happening now. So would you recommend, or not even recommendation, if a person is not staying in that area for a period of a long term, do you recommend purchasing or buying there?
Absolutely. Great question there. So it's not as important to whether you actually plan on living there long term. It matters whether you plan on owning property there long term.
Oh, wow.
So that's going to be the main gem right there. So you could be stationed somewhere and, you might leave in 6 months, you might leave in a year, and you convert that property to a rental, right? So if you plan on actually owning that home for at least 5 years, and I would even say if you own a home at least 10 years, right? No matter what market condition you buy in, it's pretty hard to take a loss, right?
Yeah.
Especially when you're looking at that from the standpoint of, you're taking advantage of a VA loan and you didn't have to put any money down. You don't have mortgage insurance and all those different factors. You literally cannot really lose in that if you plan on owning the home long term. I would say at least 5 years, but I would say try to hold on it for at least 10. You can literally survive in any market.
Oh, awesome. Okay, so as long as you plan on long-term holds and also purchasing, purchasing in that area, you should be fine, right?
Absolutely. I mean, and now it just really depends on where you are stationed, right? So obviously, if you're in San Diego and you had the opportunity to buy a home, imagine you being able to buy a home in 2010 in San Diego, right?
Yeah.
What that house will be worth now 13 years later is astronomical, the benefit of being able to do that, as a lot of our service members have that opportunity.
Yeah, I think that a lot of times too it's kind of a misnomer where, again, when we're talking about viability of owning a home, oh, I just can't afford it. I just can't afford it. Well, like you said, you got to speak to a subject matter expert or a lender that can put you in the right position. If you can't necessarily afford it now, you maybe can be able to afford it later. Even if it's not in a place that's desirable, but it may be desirable for your financial well-being. So that's great.
Absolutely, yeah. No, for sure. And I'd like to add on that a little bit more too, because when you think about that, it's like people say, I can't afford the home. It's like, well, you probably can't afford the home that you want right now, but you can definitely afford the home that you need, right? So just focus on those needs and actually focus on trying to make something happen. I remember my first property is like I could afford it on paper, but hey, I didn't really want to pay that payment. I went and got a couple roommates. Now imagine if you're in service, don't tell me you don't know some guys or gals that could come in and roommate and pay your mortgage for you, right? If a ship full of people.
Yeah, I mean, being in service, definitely if you're stationed on the ship, all you had to do is say, hey, you want to come stay with me for a few $100s or what have you. Definitely, I can almost assure you'll find somebody.
You could almost put two people to a room. You probably get a list of people so vast, right? So again, you have to start thinking about these creative opportunities. And I thought about that before house hacking was even a term, right?
Yeah.
And that is a form of house hacking there. You just have to start being strategic. Purchasing real estate is a wonderful vehicle to build wealth. Let's learn and really start thinking about strategies to do so.
Perfect. Understood. I mean, I guess that's a perfect segue into what's next, right? Because, having an exit strategy is always great. But sometimes when you talk about having exit strategies, you also need to have a component of capital, right? So what do you necessarily recommend when we're talking about having savings in your account? Like, how much do you think someone should have before going on a purchase home?
Gotcha. Great question. Now, I'm not going to hit you with the whole Dave Ramsey, right? I'm not going to hit you there, but I mean, you definitely want to have some money saved, right? Obviously, with the VA loan, you can purchase a home with no money down, but depending on where you're purchasing that property, it can be a newer home or it could be a lot older, right?
Yeah.
Different things happen. You may need a new roof, blase. People say that, but of course you have home warranties and different things that help you out. But you want to have the opportunity to have some emergency funds. Maybe you are discharging from service and you may be without a job for a while, right?
Wow.
So I recommend at least having about 3 to 6 months of your living expenses covered. So that would cover your basic things as far as, what my mortgage costs. If I have a car note, what does it cost to buy food? So let's say you add all that up and you're spending, $4,000 a month, right? So then I would say, hey, you want to have at least $12,000 saved just in case, and, $24,000 if you can, right? So, as we know on that last re-up of your enlistment, you might got a big old bonus anyway.
Yeah.
So go ahead and save that and not blow it, or when you was on deployment, save those checks, man, so that you could actually have that reserve fund, because it's really very important, to do that.
Yeah.
And it gives you a lot of financial freedom. And it just really gives you that extra reassurance of, hey, I just had a blowout on a tire, and now I don't have to swipe my credit card just to pay for this emergency expense. So you want to have that emergency fund, regardless. Start with $1,000, man. I'm not saying you have to start with 3 to 6 months. Start with $1,000. Before you go buy the new iPhone, make sure you have at least $1,000 up. And we'll be actually going into more about that whole financial literacy thing in another segment as well.
Got you. I'm glad we're actually going to talk about that. That doesn't mean all the Balenciagas, the Gucci shoes and socks. I mean, I don't know what's been going on with these socks. Like, people are like really designer socks now. So, but some of those things we kind of want to steer away from, right? So. Build your savings, build your capital, build your wealth to be able to eventually go into home ownership and to something that you desire for you and your family. Because at the end of the day, this is for most people, it is not just for them, right? But I guess that goes into talking about renting and owning. Should I rent? Should I own? Is it affordable? Is it not? I mean, I've heard a lot of gurus, right, that say renting is better than owning. And I've also heard on the other side where obviously owning is better than renting. So I guess, I would ask your opinion in today's market and also overall. What do you per se think?
Absolutely, man. I was actually just having a conversation with somebody today about that. I'm having a conversation with my barber, and I know I don't have hair, but I still see a barber to get this beard lined up. Okay, I see the fresh, crispy little line, with a little Beijing sprinkled in there, man. So he hooked me up, man. Shout out, man. Shout out for sure.
Okay.
But we're having that conversation because he's dealing with that currently, right? And he's trying to consider. It's like, dude, I want to buy a home, but he looked previously, 2 years ago, of course, and it's like, okay, well, with the interest rates being what they are, you're looking at a home for $350,000, and it's like the mortgage payment on that is going to be $2,700 a month, right? And he's like, man, I could have stayed in California if I was going to deal with those type of prices, but you have to really always look at the long-term outcome of purchasing. It's a marathon, it's not a sprint. You can't just look at it in terms of what's happening right now, right? So you want to, again, look at that opportunity cost. Yeah, for that same home, I'm not going to lie, you could probably rent that same home out for $2,100 a month, right? Yeah. You're paying more because the interest rates right now are more. But once the interest rates go down, you can refinance, right?
Yeah.
So you'll have that opportunity. But the other thing is that you have that financial stability that even if interest rates were to never go down, for that home, you're never going to pay more than $2,700 a month. And as we know, the rent is going to keep going up over the year. So when we're talking over a 5 or 10 year period of time, that rent is going to increase to more than that, right? Yeah. More than $2,700 a month within the next 5 years. So if you buy now, you lock in at that price point, and if rates go down, you're going to get that lower. But I tell you what never will be lower is that rent payment. It always goes up.
No, for sure, definitely. And I think a lot of people are always looking for that home run, right? Just that quick metric, whether if it's in real estate, whether if it's in stocks, whether if it's in business or anything of that nature. It's always kind of, I guess a desire, a human desire, always to want more. But with that being said, I think you hit the nose on the head by putting it in perspective of being able to kind of stay level and play the long-term game. Play the long-term game for most financial investments. You should come out on at least break even, right?
Absolutely. Because I know the $2,700 a month in that example, right? It seems like a lot, right? Seems like a lot now in 2023. What about 2033, 2043? It's going to be that same payment, and it's not going to seem like a lot. Like when I purchased my first home in 2014. My mortgage was $1,000, and it was only, I could have rented that same house for $1,000, but right now that rent for that is like $2,300 for that property, right? So I was playing the marathon game. I wasn't just looking at it for like, well, I could just rent this house for that same price or even a little cheaper if I don't get the upgraded version, and thinking about it in terms of just right now. Like you can't do that. Like literally by stabilizing your housing budget, that's going to help you over the course of your lifetime. Like let's say if you're not a person that's looking to house hack and do all these different investments, and you're just going to get into a traditional 30-year mortgage, live there, die there, picket fence, that's all you're doing. Well, you want to get in that house as soon as possible because at some point you're going to retire, right? Mm-hmm. And you want to try to retire without a mortgage. So if you're in your 30s already, well, look here, okay, you're 35, you want to retire at 65 and not have a mortgage. So the farther you kind of keep spacing buying a house out, the more likelihood is that you're going to have to earn more income in your retirement. If you buy a house earlier in your 20s and all of that, and you have that thing paid off by your 50, you're golden.
Yeah. And you know, we talk about retirement like everyone is going to have this pension. You know, when we talk about retirement, everyone is going to have some type of residual income that will be on a continuous basis. Well, unfortunately, let's talk about reality. That just doesn't happen. You know, the most organizations are not providing pensions, and they're making you provide your own pension by setting up 401ks, putting yourself in position to be successful. However, there's life insurance. You know, we talk about life insurance. We talk about different other retirement plans. But we can always rely and sue that real estate is always going to provide that some type of financial component of stability. As long as you're adding up the costs, and as long as you're continuously paying your mortgage down, as long as you're renting it out, whatever you're doing, I think that's kind of a retirement plan as well. So take that in consideration. So yeah, that's great, man. That's great news. But you know, obviously, when we talk about the real estate market, talk about the retirement components and economy and different things of that nature. There's been kind of so much hectic activity going on. What do you think about the mortgage rates, man? We got to talk about it. We got to talk about it. We got to talk about the rates. We got to talk about the anticipation on what to expect or what not to expect, and so on and so forth. Because we were just in historic lows. So are we going to be in historic highs now? What do you think?
Absolutely, man. I know we both crystal balled, but we don't have crystal balls, right? so we don't know. It's easy to try to project, and when you look back at hindsight and you right, you can definitely be proud of that. But it's really hard to kind of know where it's going to go for certainty. We have so many different things happening. We have a presidential election coming up. Yeah. Which way we're going to go with that is going to sway some different things. I mean, I could tell you that with it being election season, it's not gonna go too much further up, hopefully, other than the Fed fund rate they already plan on doing certain things, right? So yeah. We already know about that, right? But Biden doesn't want this thing to fall down on his watch. Yeah. So we have that, and I believe that housing affordability is a hot button issue. So when we get into the campaign season, you're going to hear a lot about that. You're going to hear a lot of promises. But ultimately, we have to kind of deal with what we're faced with, right? Mm. So, people want to look at, well, hey, in 2021, I could have got a 3% rate, and in 2020, I could have got a 2% rate, right? Well, maybe, right? Well, how much money did you have saved during that time? Right? Because if you didn't have any money saved, you were able to buy those homes because you were getting outbid. Yeah. First-time home buyers, people with VA loans, different things like that were unfortunately outbid by investors and people paying cash for homes because, as we know, everybody was paying above appraised value, right? Mm-hmm. So what does that actually mean when somebody's paying above appraised value? That means that this house is worth $300,000. They're willing to pay $350,000, and guess where that extra $50,000 is coming from? Their pocketbook. You had to have that extra $50,000 cash. Do you have $50,000 cash? Well, if you didn't, you wouldn't have been able to buy a house during that time period. Yeah. But what you're able to do now is that because so many people are scared to purchase homes and it's a lot less competitive market because of the interest rates, a lot less competition. You could come in there, man, and you could tell the seller, hey, man, you know what? I want that TV on the wall. I want you to pay all my closing costs. And, as a matter of fact, lender, you want some business? I want you to contribute. A realtor, I need you to chauffeur me around to all these houses, and I want you to contribute too. So literally, and I'm going to use this home buying assistance program. So those amazing stories that you hear about where people are able to get in a house with no money down, it happens in these type of economic environments, right? Okay. With higher interest rates when you have less competition. So literally, if you are using a VA loan, if you are using an FHA loan, if you are trying to take advantage of like a zero down payment Navy Federal program, this is actually the market that you want to buy in because sellers are more likely to actually accept those terms. When before they'll look at you like I got 20 offers. I throw that out the window, right?
Yeah.
Now it's like, okay, well, he want me to give him $20,000 for closing costs. Yeah, I want to sell this house. I'm gonna go ahead and do it.
Yeah.
And you're really able to do that. And I've been able to kind of help buyers get into properties that way during this environment, which would have been unthought of between that 2020, 2022 period.
Yeah, so basically, all in all, it's we look at it's a buyer's market right now.
Yes,
right?
it is definitely a buyer's market. It is a buyer's market for sure when it comes to that. So, I mean, people want to expect this, the prices to kind of drop off a hill. It's not going to do that. If you really look at historic things, especially here in Las Vegas, Zillow is our best friend as far as being able to look at the history of what things cost. I look at what my house cost in 06, 07. It was like $470, right? Well, it just got back up to being in the 500s and stuff like that. So it's like, well, if they was paying $470 for that back then, how much further you think it's going to drop now? And when you talk about inflation and all those different things, right? So the best thing you could do is try to secure a home right now. The prices is going to be as low as it's going to go for the most part, maybe within maybe a 5% plus or minus. You want to do that. Where you're going to really make your money at is on the interest rate.
Okay.
And the possibility of that decreasing and you being able to refinance. Because once the interest rates drop, the home prices are going to explode because people got comfortable paying a certain mortgage payment. Like we were talking about that $2,700 for a $350,000 house. Well, what happens when the rate goes down? They're not going to charge you less than $2,700 a month for that house. They're going to just charge you $500,000 for that house, and you have that same payment. And in that situation, if you bought the house at $350,000, now you got $150,000 worth of equity.
There you go. So there you go. I mean, but that's from a subject matter expert, right? That's from a professional. So this is what we talk about when you're talking about the housing market. You want to talk about it in a more of a macro environment, understanding that just because interest rates are high doesn't necessarily mean you lose, right? So, but yeah, that's awesome, man. That's awesome. So,
absolutely.
No,
yeah, for sure. Because you don't lose, and I guess the other thing, other than the fact that you're able to get some home buyer assistance and different things for that property. So I want to make sure we send that point home where the interest rate is just perceivably high, right? Because again, if they're giving you that $20,000. Paying all your closing costs, you could actually use that money towards buying a lower interest rate if you want to.
So really quickly, because I do want to kind of touch on that, right? You mentioned the VA loan or FHA loan or a NACA program. You hear about all these different programs and like, well, what's this? What's that? So can you give us an instance where you can kind of compile some of these programs? So all of them can be compiled at once. And so I guess let me ask an example. If I'm using FHA, right, I still have a down payment that I need to put down. So can I use a down payment assistance program to assist with that, even though I'm using an FHA program?
Yes, you can. Yes, you can. So the FHA loan is just a loan type, right? Okay. So as far as your home buyer assistance program, whether it's NACA, whether it's other different programs that you have. A lot of them are state and even county specific. So you want to definitely look at your area. Like we have some different ones here in Las Vegas that are pretty popular. But yeah, you can absolutely use those programs with the VA loan, the conventional low down payment loan, whether it be 3% if you're a first time home buyer. Mm-hmm. Because if you are a first time home buyer, you can use a 3% conventional loan. You can use the FHA loan pretty much at any time. And then, of course, if you're a veteran or military service member, you can use that VA loan and you can still use that housing assistance. And a lot of them, what they do is they're giving you assistance with your down payment and our closing costs.
But that's what I was going to ask you. So if I have one that's providing me assistance with the down payment, can I have another in partnership to assist me with the closing costs?
Yes, you can. There's going to be certain limits on that. So it depends on the program and depends on how much they're giving you. So programs have their limits on how much in total that they can contribute towards down payment and closing costs, and it's going to really differ with your actual loan product.
Okay.
Because if you're using a VA loan, it has certain requirements on how much help you can get with your closing costs. You have your FHA loan is different, and your conventional loan is different. So it just depends on the loan. It depends on the loan product, but in general, it's going to be the seller is going to be able to contribute anywhere between 3 to 6% of your closing costs. Pretty much 3% on that low end should cover all of your closing costs. If you're getting the maximum of like 6%, then at that point, that extra 3%, you're just using that to buy down your interest rate at that point.
Got it. So that's another strategy. You're not losing the money. You don't want to get rid of it. You can actually compile that to buy down the interest rate on what's allowable to buy down. So that's awesome. That's awesome. But yeah, I think that's something definitely we want to go ahead and make sure that the people know about. But not only that, they can also check out some of the previous videos and also content that's been provided on being able to utilize some of these programs in tandem.
Right, exactly.
But it's all going to be, again, lender based, again, state specific, so on and so forth, right?
Absolutely, yeah, for sure. With that, and then also if your seller is contributing towards your closing costs, and then or even if you're buying a new home, you have certain allowances where your lender has special products that they're using now, where you can actually do a temporary rate buy down, which they're basically buying it down for 1, 2, or 3 years, because that option is going to be a lot more affordable than to buy the rate down for the whole duration of the 30 years, right? So again, there's so many strategies to get into the home. Stop looking at it from a surface level standpoint of saying, hey, the interest is 7%, I can't buy a home. It's like, well, no. Well, what if I can tell you I can get that interest rate down to 4.5%? Are you interested in purchasing a home?
Like, sounds pretty good to me.
Absolutely. Reach out to us. Let's have that conversation.
Let's do it.
Revolving bills.